Listen, the frustration you're sitting with right now, it's real. You're watching Wall Street crush family-led funds every quarter, and you're wondering why your venture capital arm, your family office, isn't keeping up. You've poured blood, sweat, and so much expectation into these investments, yet the returns feel like a punch in the gut compared to those slick Wall Street benchmarks. You're sick of a system that seems to reward the big players with effortless wins, while your carefully curated portfolio feels stuck in slow motion. That feeling of being left behind? That's what eats at you every night. The gnawing doubt that maybe operating from a family office is a dead end. Here's the hard truth nobody's telling you. Most family offices aren't set up to win in venture funds the way they should be. They get trapped in old habits, too cautious or too scattered. They play safe, chasing steady returns that never truly move the needle. They run with outdated deal flows, rely on legacy advisors who love comfort more than risk, and end up sidelined, watching opportunities pass by because the system is made to favor slick institutional money, not unique family structures. But you aren't made to settle. You're built to compete, not just on Wall Street's terms, but your own. So what do? First, throw out the comfortable falsehood that family offices must play the old game. Forget slow committee decisions. You need a small, intense core team dedicated to moving fast and thinking like venture operators, not just wealth holders. Hire people who obsess over sourcing deals in emerging sectors where others see risk. Biotech, climate tech, AI startups nobody's figured out yet. Push past the temptation to stick with what's safe or known. The biggest wins come from relentless search in the uncomfortable, unripe territories. Second, stop treating venture investing like charity or a hobby. Family-led venture funds beat benchmarks because they operate lean, with brutal discipline. Define clear performance targets and hold every partner responsible. Don't tolerate sloppiness or excuses. Your capital isn't for feel-good investments. It must have a fight in it. Strict, ruthless focus on scalability, product-market fit, founder quality, and follow-on rounds. No off-the-cuff investments, no romanticizing ideas. Go deep on metrics that predict growth and exit, then double down aggressively. Third, and this is critical, leverage your family network, not just for funding, but for real operational edge. This world changes fast and giants move quicker, but nobody has your family's unique connections. Use those relationships to help portfolio companies with hiring, partnerships, market entry, real, tangible support the big funds can't match. That's how family offices can create outsized alpha, not by sitting on the sidelines holding checks, but by jumping in, hands dirty, providing the edges startups need to scale faster than Wall Street monsters. Here's the kicker. You have to discard the illusion that more capital is the magic bullet. Family offices often get stuck chasing size, thinking they need billions to play. That's a trap. Smaller, more agile funds with smarter deployment and real operational leverage crush the lazy giants in returns. Size alone kills speed. Become that nimble shark in a sea of slow whales. Finally, build your own ecosystem. Align with other visionary family offices who get it. Share deal flow. Develop syndicates that combine capital and expertise. The future isn't in isolation, it's in brutal collaboration, but the right kind, fierce and smart, not diluted and friendly. This network becomes your secret weapon against big institutions that think venture is just numbers on paper. So stop whining about Wall Street benchmarks and start beating them on your own turf. Get ruthless on speed, selection, execution, support, and collaboration. That's the formula family-led venture funds can't afford to ignore. The one path to owning a return profile that actually shoves those benchmarks aside. This is your move. Make it count. Subscribe to our YouTube channel and visit the featured link to discover more.